Hello and welcome to this Moneycontrol live stream. I'm Nandita Khemka and you're watching Morning Trade. Over the next 30 minutes, we'll be talking about the cues for trade, the stocks and news, as well as we'll be addressing your stock-related queries with our guest on the show. So keep commenting on our live feed and we will be taking it up with our experts. But before we go any further, let's take a look at the top headlines at this hour. Well, stocks close a volatile session higher on Wall Street, but key indices are on track for worst week since December. Prospects of faster rate hikes continue to weigh on sentiment. Asian markets trade mixed even as Japan's inflation hit an over a 40-year high. The SGX Nifty indicates a positive start for the Indian market. Also on the show today, should you be buying IT stocks amid the outperformance? We discuss that and a whole host of stocks including Mahindra Lifespace, Bharat Forge and Zee. Joe Biden nominates former MasterCard CEO Ajay Banga to be the next president of the World Bank. Hailing the Indian origin banker's credentials, the US president says that Ajay is uniquely equipped to lead the World Bank at what is a critical moment in history. Well, let's first get on board our technical expert for today, Raja Venkatraman of Neotrader joins in. Good morning, Raja. Good to have you on the show. Positive cues coming in from SGX Nifty, but yesterday we barely managed to hold on to that 17,500 mark. Would you expect the Nifty to then snap out of the 5-day losing streak that we've seen?
Yeah, good morning, Nandita. So this is exact, you use the word, the right word, barely holding on or rather clutching on to the support levels. So I feel that as long as 39,700 to 40,000 on the Bank Nifty holds, I put more weightage to the Bank Nifty because Bank Nifty is something which is actively traded and it is also influencing the sentiment. Currently at the moment, the sentiments is all skewed and people are really not clear about what's happening. And what I feel is that Bank Nifty holds the trigger way forward. Now, as we take a look at the kind of price action and as we take a look at the kind of build up from lower levels, we see that we have seen a week of decline. So probably today would not be a good day to go short. Rather wait for rallies to go short, and I would envisage a rally towards 40,700 on the Bank Nifty and 17,800 on the Nifty to really introduce a short into my system. Otherwise, I would be waiting for the markets to break these support levels. But today would not be a day to go short because we are on the last day of the week. But then if you take a look at the overall bias, yes, the overall bias seems more tense and tilted towards the bearish side. Now, when you take a look at the option data as well, they are also gearing up and they are also indicating that, yes, there is some bit of negative sentiment which is at work. And after almost a month of narrow range action, we have seen a breakdown. And this could probably sustain over the next few days. So those who are intending to go long at lower levels should beware.
Well, avoid shorting is what Raja is saying. He also spoke about the Bank Nifty. Raja, hold that thought. I'll come back to you. We were talking about the Bank Nifty, which was the star sectoral performer last year, but again, it's underperforming this year. And on the contrary, Nifty IT had clocked its worst year in a decade last year. And this year, it has been, outperforming since the start of the year. So let's take stock of what is working for the IT sector this year. And for that, we are joined by Madhuchanda of Moneycontrol Pro. Good morning, Madhu. Good to have you on the show. Well, as I was mentioning, IT had clocked its worst year in a decade last year. But this year, it has been outperforming. And year to date, if I'm not mistaken, the index is up somewhere around 7% or thereabouts. So what has changed? What are the factors that is driving this outperformance on the IT sector now?
Yeah, it's a couple of factors. One definitely is on the fundamental side. Now, US rate hike is almost 10 year old and we have seen a steep hike in interest rates. But contrary to expectations, which was the fear last year, demand for technology has not really collapsed. There is some pockets where there is some stress, like which is obvious in the pockets of mortgage, some parts of discretionary retail, then high tech, etc. Definitely, there are certain pockets of stress. But overall, the demand for technology has held up well. There is a change in the nature of demand. There are more cost optimization projects which are coming up, and some of the cost savings from this cost optimization projects are being plowed back into continuing the digital transformation exercise of enterprise. So overall, demand has not collapsed at all, and the supply side situation has improved with lower attrition, and that should have a positive rub-off on margin. So, in the middle of last year, we had very little visibility of FY24, but today, as we speak, there's great visibility for many of the companies for a strong FY24 as well. So that's the fundamental factor. On the top of that, there is a technical factor, which is the Indian markets. Contrary to expectations that the domestic situation has improved significantly, now we definitely see speed breakers in the form of a possible consumption slowdown, which could get aggravated because of a subpar monsoon. Expectations are that there could be a deficit monsoon this year. And above all, the sentiment has been dented by the Adani saga. So all that put together puts IT in a relatively sweet spot.
Right, so IT is in a sweet spot. So let's also talk about the valuations of some of these IT stocks. How are they stacking up now? And is there scope for margin expansion going forward for the fourth quarter that's coming up and the next financial year?
See, in terms of valuation, last year we were all waiting for the pre-pandemic valuation to come, because the expectation was that there could be maybe a year or so of extremely lackluster performance. So IT has gyrated, and now it's at a level where the valuation is still at a premium to the pre-pandemic valuation. But having said that, the scenario for technology spending is also changing. We are going to see a multi-year technology upcycle. What was expected to be compressed for over a period of 4 to 5 years during pandemic, maybe now would get elongated to 7 to 8 years. But in the medium term, there's a strong visibility of technology spending, and that is why the valuation may not be extremely cheap, but given the earnings visibility, definitely warrants a merit. And coming to the margin question, as I already mentioned, the supply side pressure is easing, and hence the margin trajectory is looking up. So fourth quarter execution could be better, because Q3 is a seasonally weak quarter for many of the IT companies. So yeah, a marginal uptick is expected, and definitely in 24 we expect a tad better margin for many of the well-run companies.
Well, so margin trajectory looking up for these IT names. Now that things are looking up for IT, is this the right time to take exposure to some of these stocks? And if yes, which are the stocks you would advise investors to look at, both from the large and mid-cap space now?
So tactically speaking, IT looks to be in a good place. But having said that, these markets are going to remain volatile. So we would recommend a gradual accumulation of some of your high conviction names. In the large cap, we like HCL Tech, Infosys, and TCS. And our favorite from the mid cap space is Coforge and Persistent System. Of course, in terms of the valuation and deep value, we also like Zee Ent and Emphasis. There are two other stocks which we like, but we would wait for more correction, one being KPIT and the other being LTIMindtree.
Well, so those are the stocks to watch out for in the IT space. With that, Madhu, thanks a lot for taking out time this morning and putting things into perspective for us. With that, let's go back to Raja then. Raja, I want to first ask you a question about Zee. It has been reacting to news flow, of course, but it managed to end off day's low in yesterday's session. And then the NSE is also put it in the FNO banned list. So how are things looking for Zee? What do you expect the counter to do in today's session?
Yeah, see the overall kind of activity which we saw in Zee, we also witnessed some large volumes out there, but the trend has been definitely to the way down. So yesterday, after a sharp dip to the way down, we saw the prices recover from lower levels. But what we got to understand is that the entire trend is headed lower. So we'll continue to experience supply on the way up. So now, if you're talking about the way up, so if you're looking to introduce a short into Z, so the levels would be somewhere in the region of around 215 to 220 zone is where I would look to short Z. Otherwise, Z is an avoid from my side.
Well, Z is an avoid and for now. So moving on to the next stock, Mahindra Lifespace. This stock is in news because there's been a change of guard. MD and CEO Arvind Subramanian has resigned, and Amit Kumar Sinha will be replacing him from May. Now, if you look at the stock over the last 5 days, it has shaved off somewhere around 5% or thereabouts. What do you expect this counter to do today?
So, Mahindra Lifespace is trying to revive from its lows, which was formed in Jan, and the overall sentiment continues to emit some positive response. So, overall, the trajectory seems to be holding on, and well, the stock could slip into a sideways action. So, yes, the news flow does not seem to be having any impact on this counter. So, if anyone is having a position in this Mahindra Lifespace, they should continue to hold on.
Well, continue to hold on to Mahindra Lifespace if you have it in your portfolio. Let's shift focus to the queries that are trickling in this morning. The first one comes in from Harry Singh, and he wants to know if stocks like SBI and BOB will see further pressure. And he also wants to know whether it's the right time to enter or wait for further correction to enter into these stocks. What would you advise him to do?
Yeah, so the likes of SBI, BOB, they have had some severe decline, and well, the PSU Bank exposure to the Adani impact was highly overrated. But what has happened is that people have relied more on the news than on the facts. But what's happening right now is that the stock has dipped into some decent sets of supports. So I would wait yet to see these prices sustaining at these levels, because currently the market sentiment is still not firmed up. So now if you ask me what would be a good support level for SBI to buy into, I would mention it around 490 to 500. So if you're having capital, then you could buy some here and buy some on dips to those levels, or wait for the dips to occur and then go long from when there's a recovery from those levels. So I would so that's there's a two-part approach which you should take.
Right, two-part approach that Raja is recommending for SBI and BOB. The next query comes in from Vignesh, and he wants to know your thoughts on Motherson Sumi. He has 300 shares which he purchased at 106 rupees a piece. He wants to know if this is the right price to buy and maybe average for a target of 100 rupees. Stock is trading around 80 rupees or 81 rupees or thereabouts, and over the last 1 month it hasn't done all that badly. It has given returns to the tune of 11% or so. What would you advise him to do?
Yeah, the stock has run up phenomenally well, and currently the market is not at a juncture where you should be looking to trade breakouts. Rather, you should be looking to trade on dips. So, if you are a long only player in the market, then look for dips in the region of around 77 to 78 to add to your position rather than adding at the current juncture, because at the current juncture, a profit booking zone is emerging around 87 to 88 zone.
Right. I want to talk about the next stock, the query that's coming in on ITC. Now, this stock hit a 52-week high in yesterday's session. It has been doing fairly well of late. Chandu Vutukuri has sent in a query, and he wants to know whether he should hold it or book profits at current levels.
No, ITC definitely is a bellwether stock. It has been holding on to the entire market bias itself. The small bit of bullishness which is there currently in the market is because of ITC. So as long as ITC continues to move, you should hold on, because there is no signs of any exhaustion here. If you really need to exit it, it has to really go below 350 levels for one to consider an exit. Otherwise, it's a good hold. It's a good hold to buy at current levels, buy on dips towards 360, 365. It's a very good positional hold.
Right, good positional hold. That's the call on ITC. Let's take up a query on Tata Motors as well. This one is coming in from Manish Khedkar, and he wants to know your thoughts on this counter. Now, there was a news flow around this counter that the company is looking to sell stake in its EV business, and if you look at the share price, it hasn't really done all that badly over the last 3 months. 3% gains, not much, but nevertheless, it's given positive returns over the last 1 month. What would you advise investors to do with a stock like Tata Motors?
Yeah, see, the entire EV business space has been maturing. It's going through its share of pain as well. But then what I find is that within a passage of time, the Tata Motor stock should do well. So it's a good play for people who would like to hold on for at least, say, 6 to 8 months. Otherwise, it's largely a traded stock. So you can see that active trading happens in this, and the overall bias in the stock is towards the upside. I continue to have a positive bias in this. A move above 460 zone would take it definitely towards around the region of around 520 to 540 within the next 6 months.
520 to 540 on Tata Motors within the next 6 months. That's the prognosis coming in from Raja. So the next query is coming in on Deepak Nitrite. Arun has written in and he wants to know the long-term prospects of this stock. Now, it's trading around that 1800 mark over the last 6 months, shaved off nearly 10%. 52-week high was at somewhere around near to 2400 rupees. Do you expect this counter to make a dash at 2000 levels anytime soon?
The entire recovery which was seen from the month of May last year to the November. May to November, it saw a very good run, and the entire rise has completely been retraced. Now, at this juncture, it is at its May low right now. Okay, it's almost 9 months low we are trading in, and it's trying to attempt a salvage out here. So, yes, you could. The entire specialty chemical sector itself is undergoing a lot of pain right now. The story does not continue to be as exciting. So one should be careful while buying into the stock, considering just that it has come into some strong set of supports. So you should partially buy into this stock right now, not put in your entire capital, and wait for the prices to move above 1900 for really seeing some upward traction. Now, the upward bias, the target zone would emerge around 2100. So that's the target which I'm giving for any rally which you will see in Deepak Nitrate. Overall trend seems to be very muted. So you have to trade carefully as you participate in this stock.
Right. Trend is muted. Tread carefully when it comes to this stock. The next query is coming in from Sandeepan Shah, and he has a query on India Cement. There has been, of course, a lot of impetus on capex in the budget, and because of that, the view on cement stocks has been fairly positive when I've spoken to analysts about it. So for India Cements also, would you advise investors to buy into this one right now?
Yes, the budget news flows was definitely encouraging, but at the current juncture, the cement sector is undergoing some profit booking, and also some bearish bias has stepped into it. And especially when you talk about India Cement, the stock has been on a steady decline since December, and it looks like the momentum could continue lower. So this would not be a good time to buy into India Cement.
Well, not a good time to buy into India Cement. Let's take our last query for the day. This one is on IRCTC and it's coming in from Shakti Singh. Rail stocks have come under pressure. What would you advise somebody to do with these stocks now? Because they had run up a fair bit last year and now that rally has fizzled out. So, positive view on this stock or negative?
Yeah, so like you rightly said, the stocks enthusiasm is fizzling out, and it's fizzling out very fast. So my advice would be that it would be a best time to exit IRCTC, because from here on it looks to be heading much lower. So whatever may be your entry price, you could see it dropping all the way further towards the region of 500 within the next 1 month, because the kind of sentiment which is getting built and the kind of setup which is emerging, it definitely looks much weaker.
Right. So I hope that answers your query. With that, it's a wrap on this query segment for today. But if we weren't able to take your query, don't get disheartened. Continue sending in your queries, and we will be taking it up tomorrow, if not today. So Raja, before I let you go, leave us with some of your stock recommendations for today.
Yeah. So I would also be going long in ITC, because the overall momentum continues to be bullish. I would buy it at current levels, place a stop loss at 378 for a target of 410. for an intraday as well as a multi-day play. And I would sell GNFC from the chemical fertilizer, and with a stop at 5 sell at 527 for a stop at 535 for a target of 508.
Right, so those are the stock recommendations coming in from Raja this morning. Well, with that, Raja, thanks a lot for taking out time and joining us this morning. Well, with that, we are completely timed out on this edition of Morning Trade, but don't go anywhere because coming up next is Opening Bell.